That I think that probably is well, it's the reason that our company is in business is to help people compare the options that they have. Now, what will happen when the exchanges are implemented, I think, is that there will be a standard set of benefits. In fact, I know that's going to happen, and then there'll be a method to gather that information in one place. And then from there, you have to move forward and then allocate your resources based on what your personal needs are. And those are the questions that each individual would answer. But the key to the exchange is that everybody has got the same basic plan that they're providing to you. There are no differences. So you don't have to go through volumes of sales material to try to understand which one's better and why one's more than the other.
Yeah. Well, I remember this isn't health insurance, but it reminds me, years ago I was actually shopping disability insurance, and I was looking at these different companies and what they were offering. And what I felt like, I thought a little bit of, going shopping for a car, and on this one you can get the stereo, this one you can get air conditioning, and this one, has the trailer package, but you couldn't find, three that were all the same, really. They were
Right.
all packaged a little differently. It made it really hard in trying to make decisions.
Yeah, and I don't think that there will be no differentiation between what Blue Cross offers and what Cigna offers, or Aetna, or Blue Shield, or somebody else. But the basic benefits are set by the government. Those have been decided. So there will be coverage for office visit copays. There will be coverage for prescription drugs. So they'll have specific things that will be in every policy. Now, you probably will have to determine on some of the peripheral things what's more important to you. But for the basic benefits, those will all be standardized, and therefore hopefully easier to compare.
So why are some states fighting this idea of exchanges?
Well, I think that what happens here is that there's, as with anything that we get that's this size, there's questions about the costs of these things and what's going to happen long term. And I think a lot of the governors of the states that have resisted this have been worried about it's not sustainable over the long haul, or it increases my Medicaid commitment, and therefore we can't do that, or we don't want to do that, or whatever the reasons are for that. So, I mean, in California, we were one of the first ones to put the thing together for us. So hopefully we can be a model, as we are in most things, for the rest of the country, and to see that it works. And
yeah, well, we seem to be the headquarters for making like websites and things, and it seems like that's the ideal model for this sort of thing, and can be done. All right, let's move on. How about the individual mandate? So what is it, and why is it being challenged?
The individual mandate is an interesting piece of the new law, which was one of the big bargaining points of the health insurance companies, is that in order to provide a guaranteed issue insurance where they let everybody in, no matter how sick you were, they would have to have everybody participate, because otherwise, clearly, all you'd have would be the sick people in there and no well people, and so you clearly couldn't run a business in that way. So the mandate is, I think, critical for the success of the whole system. Unfortunately, the mandate that we have currently, I don't think has enough teeth in it to make it meaningful. So the penalty is not enough. It starts at $700 if you don't sign up, and it goes up to $2,000, or 2.5% of your gross income. So at that level, I mean, maybe it's worth it not to do it, and those are the kinds of decisions that people would have to make at that time, which clearly that's not the greatest way to run an army. Okay, the other thing we face too in California is we currently have a mandate for everyone to have auto insurance, And that mandate is being ignored by 25% of the drivers in California. So the whole idea of mandate, may or may not work out. I think the reason that people oppose it, if there's a reason beyond political maneuvering, is that it forces an individual to buy something that they may or may not want. So.
And so they're saying, as I recall, in some of the court cases that are going on, and I'm not a lawyer, folks, anyway, is that this violates the Commerce Clause of the United States Constitution because of taking away, basically requiring somebody to buy something, in this case insurance, or medical insurance.
Yeah, and I would second that. I'm not a lawyer either, which is clear. But the situation with this, and I think this piece of commerce law, if you will, is a little different than most things. I mean, nobody's going to compel anyone to buy an iPod. That's something that if you want it, you get it, and you don't, you don't. Healthcare is different. This is similar to the idea that we don't have a right as a society to require people who are riding motorcycles to wear a helmet, because as a compassionate society, what happens to us is when one of these people without a helmet would be involved in a car accident lying on the street bleeding to death, we wouldn't allow that to happen. So we would put them in the hospital for hundreds of thousands of dollars, and they wouldn't be able, or they didn't pay, and therefore it was a drain on the whole system. So I think this is the same kind of an idea, maybe not exactly, but the same kind of a thing, and I'm sure there's an economic term for it that I don't know.
Okay. So where do people usually get medical insurance?
Well, most insurance is provided by employers. In our company, we have an employer-based system, which I think in general terms is providing pretty good insurance for all the people that have it through their employers. I think we saw that through all the debates, that many people were very happy with what they had. They weren't happy that the prices kept going up, but generally the coverage that they had, they felt pretty good about, and that's one of the main things. So, and I see employer insurance, no politician that I've talked to wants to change that idea. I mean, they think that building on that system is better than going some other way. If you lose your employer-based insurance, you have the availability of COBRA on a federal level if your company has 20 or more employees, or you have in California CalCOBRA if your company has less than 20 employees, which allows you to continue that. On the individual side, you do have the availability, depending upon your health and your pocketbook, if you will, of getting individual insurance, either through the individual market over the internet or through somebody like us, or if you have pre-existing conditions that don't allow you to get insurance in the commercial market currently, you can use one of these, either the state-run Mr. Mib board or the pre-existing condition insurance plan provided by the federal government. So, and again, that's going to move to an exchange-based scenario in 2014. For people over 65, of course, they have Medicare and Medicaid if you have a low-income situation, and also supplemental coverage to Medicare is available and freely available on a guaranteed issue basis with some restrictions, and Medicare is basically an 80-20 kind of a plan, whereas you, the insured, pay 20% and the plan pays 80%. And there are, the supplements then would pay the additional 20%, so you have very little out of your pocket at the time of the care. Also, you have available Medicare Advantage plans, which are plans run by commercial insurance companies that basically replace Medicare and provide a level of Medicare-like benefits and then some additional benefits as well. So that's a system that's in place and changing as well.
Okay. So time is going rapidly.
Oh,
so we've got maybe 4 or 5 minutes left. Why don't we talk about some of these other things that are available that sort of supplement the plans? Like One is the health savings account. Maybe you can talk a little bit about that and how that's developed. That's a fairly recent, in the last few years, has come out.
Yeah, the health savings account is an iteration of the old medical savings account plan, which was developed quite a few years ago. And the health savings account is designed primarily to get the medical service consumer back into the marketplace as a consumer. And by that I mean that under the typical HMO or PPO plans that we've been operating under, office visit co-payments to a doctor were $25 and lab work was $10, that kind of thing. Well, that's a system that is not accurately reflecting the price of those products. So, and the employer was paying the difference typically through the medical plan. So what the HSA plan is designed to do is to get you and I back in there at the point of sale where we're saying, is this the right service for me? And are you the right provider for me based on the price? And let me give you a quick example from my own experience. My son injured his back in athletics, and we went to the back specialist, and he told us we needed an MRI. I said, well, is there any, where should I get this MRI? He said, well, there's two places you can go that are close to my office, and either one of them are fine. Either one of them are okay. They're both going to give me the same document that I'm going to read. So I said, well, then it doesn't make any difference where I go. Maybe I'll just make a couple of phone calls because I did have an HSA plan. So I made a call, and one provider was going to charge me $2,500 for the test, and the other provider was going to charge me $1,500 for the test.
Wow, that's a big difference.
Now I'm a consumer. There was no difference to my doctor where I went. I went to the $1,500 provider. Now, let me hurry up to say that the deductible on my plan was $6,000 on my high deductible health plan in conjunction with my HSA. So the first $6,000 I was responsible for paying out of my own pocket. So clearly that $1,500 versus $2,500 was a better arrangement for me than the other. Had I had a plan that just charged me $100 copay for an MRI, it wouldn't have made any difference where I went. Mm-hmm. And maybe I'd have said, well, I'll just go to the other one. Maybe I never would have made the call. That's probably what would have happened. Okay.
So we probably have, about a minute left. So maybe what I'm going to do is just ask for you to, time goes. How about some maybe final words of wisdom, things that people to think about related to medical insurance individually?
Yeah, I think it's really important when you're choosing a medical insurance plan that people think about the idea of insurance and how much insurance do you actually need. If you are a person that has many, many expenses, many prescriptions, many visits to the doctor, then you probably have a need for a certain type of plan, maybe a more comprehensive plan that pays right when you first go. However, if you're a person that doesn't use your plan very often, maybe once or twice a year, maybe you're a person that needs to pay less or that could be benefited by paying less, and you could get into a plan like an HSA plan, a high deductible plan, where the premiums are much lower. So you have to weigh the difference between what I'm going to pay every month as a premium to the provider, the HMO or the insurance company, versus what am I willing to pay when I end up going and getting those services. And if I'm willing to make a phone call to try to make a better deal for myself, then I could do that.
Thanks a lot, Don. Thanks for being my guest
all
today.
Right, appreciate it, Mike. Thank you.
Folks, we're all out of time. Hope we've given you some things to think about related to your individual medical insurance. And we'll see you next time on Financial Insider Weekly.